Interest rates went up. Are prices gonna go down? Should you wait to buy? Let's find out.
And we are back with another market update for the month of January. Let's get right into it. Looking at the data, right, for condos, co-ops, and residential homes. In January, there was a total of 4,647 homes on the market. There was 1,465 new listings that hit the market, which is down about 17.5% from the same time last year. There was 812 new contracts pending, which is up about 7.5% from last year. And lastly, there was 911 closings that hit the market, which is about 31% up from last year.
On average, these homes were on the market about 80 days till the closing. The average list price for these homes were $937,000, which is about 9% higher comparing to the last year. Average sold price was $899,000, which is still 9.6% higher from the previous year. Condos and co-ops, interestingly, the average list price was about $375,000, which is also up only 1.6% compared to the houses, right? Big difference. The average sold price for the condos and co-ops was $355,000, which is still up 1.7%. So the bottom line is, we see a drop in inventory again, right? Another month. So the demands remain strong. Houses are selling faster and for more compared to the last month, to the last year, right? Prices appreciation, it's still going strong. Mortgage rate remains relatively low, even though we know they've gone up about 1.5% for residential real estate, but they're still relatively small, okay? So what does that really mean, Josh? What does that really mean for the buyers and sellers in the market looking to buy or sell?
You definitely see a drop in inventory. There are less homes hitting the market, 17.5% down, but we see more contracts and more closings, which is about 31%. New homes are not hitting the market, but the homes that were sitting on the market are now starting to sell. People still want to buy. Interest rates are still low, so they want to take advantage of it.
We got tons of buyers right now really flooding the markets, right? And they really want to purchase homes and become homeowners. And I want to say one thing, guys. It doesn't really matter what the price is or what the rate is. Really what matters to you as a buyer the most is the monthly payment. Is there something you and your family can afford for the long run, right? To pay for that on a monthly basis for the mortgage, for the principal, interest, taxes, insurance, utilities, and maybe some repairs. So if that's the case, you shouldn't be really waiting for the prices to come down. We don't even know if the price is going to come down.
For the family that's looking to buy, I suggest that you shop around, look at different banks. One of the buyers that we're working with, they're approved by one of the big banks, and the problem with them is that they give retail rates. They don't have a big enough margin to have some wiggle space to help you out with the rate. With the lender that we suggested her go with, she was actually getting a lower rate than the big bank that she was working with for 2 years that she felt secure with.
She's saving about a couple $100, I think, just on the rate, right? And that's not it, right? She's also saving a bunch of money on the PMI.
PMI is private mortgage insurance. If you're putting 20%, less than 20% down on the house, you're going to have to pay private mortgage insurance. And this is insurance for the bank until you hit 20% that they're secure that they're going to get payments up to the 20%. Yeah. So you're going to pay a monthly fee, right? It depends by bank. Every bank has different fees. The PMI rate that she was getting from that big bank, she was going to have to pay, I think it was between $400 to $500 a month extra on top of the mortgage. And with the bank that we suggested her go with, the PMI is only $130 a month.
That's huge. That's like, 3 plus 2, that's like $500 right there. There might be groceries for some families, right, per month. Because the PMI also varies, right? You have conventional PMI, you have an FHA PMI. How is that calculated? Is both differs. Also what's really important because the rates, they've gone up, right? So the monthly payment for everybody have gone up as well. And it did push some people out of the marketplace. The budget people have, they usually can push it a little bit further, right? So even that 1%, it makes the housing maybe $200, $300, $400, $500 more expensive, but their original monthly budget, it wasn't the maximum. So now they can really push it to the maximum, right? They can push themselves a little bit and still get a house in the same neighborhood, the same size, maybe a renovated house ready to be moved in. I think that's probably a big bunch of people, the biggest percentage of buyers, they have that extra budget available, so the raise doesn't really affect them. Now the biggest question I think is, will the prices come down? In some neighborhoods it might be the case. However, what we see locally in Queens, Long Island, Brooklyn, and Bronx, right, because the demand is so high and the supply is so low, what will drive the prices is the supply and the demand, right? The interest rates, it has an effect on the demand, on the affordability for people. But because it is still very affordable, even at 4.5%, 5% for people to buy, it doesn't really have much of an effect on the demand. Okay, for those of you looking to buy and you have money in the bank, which you've been saving for years, 10, 15, 20 years sometimes, right? Inflation is going to really eat into your savings. And what I mean by that, when inflation rises, historically, the real estate prices always surpass the inflation, right? So what does that mean? If the inflation this year is going to be 10%, the real estate appreciation is going to be at least 8%. And we said the average sold price in Queens is $899. So let's just say if the price goes up 12%, it's about $100,000, right? So you're going to be paying $100,000 for a home than you could today. So is it really for you, smart choice to wait? Not necessarily. I know that everybody's scenario is a little different. But again, if you have any question, just comment, reach out to us. We will have to go with the scenario with you to really figure it out. What is the best option for you? We see a drop in the inventory again, right? And, it's really tough for buyers to buy good homes. So what are some of the tactics we do over here to really help them out to get their hands in the right place?
Yeah, man. One of the things that we do is we scope the market on the daily, probably twice a day, once in the morning, once at night. So we see when a home hits the market. The second it hits the market, we know what the families are looking to buy, right? So we want to jump on it before anybody else gets a chance to see the home. Just because we scope the market, twice a day, right? We have a great pulse on the market. So we're always on point and helping our clients, find the right home for them.
Because we in the business and we talk to people pretty much on a daily basis, buyers and sellers, we actually have access to homes which are not even on the market, where they either going to be hit in the market or maybe the sellers actually are thinking about putting their homes on the market. So if you're looking to buy, we actually can get you an access for homes which are not even on the market. They're off the market. So there's pretty much no competition. Once they're going to hit the market, you're going to be the first person getting in, running an offer, and making it happen.
We have built connections with other agents in our local marketplace. So before even something hits the market, they'll reach out to us, let us know, hey, we got a listing coming soon. Do you know anybody that's looking for a house like this?
Yesterday I was calling up some agents just to build the relationships or keep the relationship going. Upstairs I spoke with Carolyn, right? And she just had a great listing which hit the market a couple of days ago, and she got multiple offers, of course, over the asking price, right? And I talked to her a little bit, not just told her, hey, the home sold, okay, great, bye-bye. But I had a nice discussion with her, like a friend to a friend. And after a couple of minutes, she was like, Johnny, by the way, I'm going to have another listing. I know this family for a while. They're not thinking to put a house on the market right now because they'll be moving by the summer and they have to get the house ready to be sold, right? But they'll be putting on the market, by the summer. I said, okay, that's fantastic. But if we can get you somebody right now and go on the contract and give them the time to really make that move and then close in summer, will it work for them? Of course. So we just get an access to inventory which nobody else knows about. So not only you could buy a home in today's market, but you can still get a nice discount on that home because there's really no competition for you. If you find this helpful, please share it, comment, like, and subscribe, and we will see you on the next one.